Now, I think to look at this subject, one has to understand the nature of Africa itself quite clearly, because Africa is a quite different continent from many other places in terms of its composition and makeup. So I have tried in a few slides, first of all, to give you a background. Now, the total population of Africa is estimated at between 900 to 1 trillion. So it's quite significant. Still, it's only 1/7 of the global population. And we estimate that the Muslim population out of that is between 50 and 60%. So in a very true sense, Africa is a majority Muslim continent, whichever we look at it. I have even tried to look at sub-Saharan Africa, which is minusing all the North African countries, and still the majority comes out as Muslim. So there is a lot of potential, if you like, audience for any provision like Islamic finance or insurance and so on. So I don't think it's a question of numbers or a question of possibility. It's now a question of what is needed and what can be delivered. And these are some of the big Muslim populations in in Africa. So you have Nigeria with about 90 million, Egypt 74, Ethiopia 53, Algeria, Morocco, Sudan, Tanzania, and Mali, in that order. And then there are other countries with smaller populations and smaller number or larger number of Muslims. But this is the top 7 or 8 countries. And this is something which most of you are familiar with. This is how Africa looks, and its proximity to Europe on the North African side, and then the whole continent with different countries and so on. There's just one thing on this which I need to highlight, and it is that most of Africa was colonized over the last 200 years. And it was colonized by a number of powers, mainly, of course, the United Kingdom, France, Belgium, Germany, and Italy. And some of the countries still have legacies of their ex-colonial powers. So the English-speaking countries would mostly be ex-British colonies. And then the French-speaking countries, especially in West Africa, would be what we'll call Francophone or French-speaking, and North Africa as well. So when you are looking at the possibility of Islamic banking, you will see that the French-speaking countries will not take easily from English-speaking countries and vice versa. So we have to be quite aware that this division exists. The Italians and Germans haven't left much mark at the moment. They have Italy, for example, was in Libya and Ethiopia, but I think they haven't got that legacy still. France and UK definitely have. The other thing to note about Africa, which shows you here, is that right in the middle of the continent, you have the equator. So most of the middle of Africa is tropical, and tropical forests. And so the density of population there is quite small. And then on the two sides that I will show you in the next couple of slides, there are huge deserts. Now this is just before that, this is the topography. This is sort of showing you which places in Africa are very high. So if you see that these around the tropics, where you see these lakes, these are the highest points in Africa. And from there flow the biggest rivers. So you see from Lake Victoria, you see the Nile going right up to the Mediterranean, and then the Zambezi River going this way, the Congo River this way, and the only big river here is the River Niger, which goes down into Nigeria. Okay? So this part really is the highest point in Africa, so much high that from there up to the Mediterranean, the Nile will flow. And And then this one shows you the forested and desert. So it's a distinction. So those very light areas, this is the Sahara Desert on top and the Kalahari Desert in the bottom. And the middle, of course, tropical forests, and then the savanna grasslands. So it's a strange thing. And of course, in the Sahara or in the Kalahari, you wouldn't find great populations. Yeah, there are only nomadic populations, shifting from place to place over a period of time. But as we will see, even these deserts have now got great potential for things which will be of interest to us all. Now, having said that, Africa is also moving into the modern world. So if you look at that, that was the internet connectivity in 1995. And if you look at the 2001 map, you see that there is almost universal internet connectivity. Of course, that's not what we call broadband connectivity, right? A lot of it is dial-ups, and a lot of it was through expensive satellite connections and so on. But one way or another, by 2001, Africa was connected. And then, since then, it has increasingly been linked to the undersea cable backbone for internet connectivity. So you are having quite serious broadband connections in most of the African countries now. And these cables have also gone around there on this side. So all these countries are beginning to be connected with affordable internet, so that it's becoming a connected continent. And I think in the next 2-3 years, that will not be a big question to be looked at. So what are the key features of this continent? The first one to bear in mind is that it is still a largely rural population. So my estimate is that 60% of the population of Africa would be rural, and only 40% will be urban. And therefore, the key occupations of people will be agriculture and animal husbandry. The key exports out of Africa mostly would be commodities, of food commodities, other commodities, minerals, and in some cases like Nigeria, Angola, and Algeria, Libya, oil as well, because they have significant oil resources. But oil is small compared to the others. Most other countries would have commodities and minerals. The other feature is that the average GDP per capita for Africa is under $1,000. So it's not a wealthy continent at the moment, as we would see. And there are other implications of being under 1,000. If you are, for example, having a GDP of under $600 per capita, you are also eligible for IDA grant funding. IDA is the International Development Association, part of the World Bank Group, which we will see, which will cut off financing for most of the infrastructure projects because they could be funded much more cheaply by IDA grant funding. The key thing for us to understand at this point in time is that the banked population, people with bank accounts in Africa, is somewhere between 20 and 30%. So 70% for sure are not banked. So if you are looking at reaching anybody, you have a big battle if you go to conventional models of banking. And in urban areas, you might have up to 40% banked, but rural areas, maybe only 10% banked. And so you have a challenge there of how to actually reach them. Well, if you have a banking model which gels with that. So in terms of, this translates in, if you're looking at banking facilities, like one bank per 100,000, one bank branch per 100,000 people, which is really very, very thin on the ground. And when you come to capital markets, it's even worse. you probably have the most active capital market in Africa is the Johannesburg Stock Exchange, and then followed by Nairobi and probably Cairo and maybe some of the North Africa. But overall, apart from Johannesburg, you won't find the kind of liquidity you want to do any kind of secondary trading. So you're looking at quite basic problems when you are looking at operating financially in Africa. So when you look at, this is just giving you an idea of the banked population in Kenya and sub-Saharan Africa, and reiterating what I said to you. But we'll also look at how this has been overcome by some other providers of other services in Africa. But having said all that, Africa is an enormously rich continent in terms of commodities, in terms of minerals, and other possibilities. And therefore, as Habib mentioned, as these shores become relatively unattractive, people are venturing forth again to see if they can tap that potential. And we have recently, in the last couple of years, big international law firms from here have opened branches in Morocco, in Egypt, in South Africa, and other places. International banks started operating in Africa again. So Barclays, through its ABSA operation, is big in South Africa. Stanchart, which was the Standard Chartered Bank, is also operating in Africa. Standard Bank, which was originally part of the Standard Chartered Bank, and then Standard Chartered left it for Asia and gave it to the Stanbic in South Africa, is also becoming big. Then there are other ethnic banks. You have Habib Bank and all kinds of Indian banks across the continent. And recently, some of the GCC banks have also opened and started operations in Africa. So globally, there is some interest in looking at the opportunities in Africa, and big firms have started to make studies again as to what are the possibilities, potential in different African countries. In terms of Islamic finance, we have seen operations, small and big, in Egypt, Tunisia, Morocco, Kenya, Tanzania, Gambia, Algeria, Sudan. Sudan, of course, has been there from the beginning. It was the beginning point. Senegal, Nigeria, Uganda, and South Africa. So about 12 countries already have one kind or another of Islamic finance operation or takaful operation. And central banks and regulators in these countries are beginning to formulate ideas as to how to regulate them, consulting other people who know a bit more, and so on. And in some countries, the introduction of Islamic finance has created quite a number of issues. In a country like Nigeria, where there is a balance of population between Christians and Muslims, and it's a very delicate balance, the introduction of Islamic finance was seen as a sort of affront to the other side, and lots of people were arguing for it to be withdrawn. But it's gone ahead. Guidelines have been issued by the Central Bank of Nigeria. And the present governor of the Central Bank of Nigeria, Malam Sanusi Lamido, who is himself a Sharia scholar and a very competent banker. In fact, he was awarded the Banker of the Year award by Bankers Magazine, and he's also been nominated as, and of course awarded the honor to be the best banker in Africa for the last year. So he's quite a prominent banker, and he's championing this move. But he's cautious because he also wants to make sure that whatever is done robustly. And Nigeria, as you see, is about 80 to 90 million Muslim population, so it's a big potential for many operators. In Nigeria, since Sanusi is coming, he has tightened capital requirements and so on. So to set up a banking operation in Nigeria is quite an onerous exercise. You're looking at serious capital commitments, just to make sure. So, and he has not made any exception of Islamic banking. So that's just one example of what can happen. Now, what are the challenges which one would face in Africa, just to see what will work? The big needs are, there are very large infrastructure needs. You can go to most African countries and you would not be guaranteed 24/7 electricity. You would have 2-3 hours of blackouts. So that gives you an idea of straight away. You can see the airports, the ports, the roads, everything needs to be upgraded in order to take advantage. You have this large unbanked population, 70% plus, which somehow needs to be reached. And the requirements of this population for financing predominantly are for agricultural finance, commodity export finance, other export finance, and microfinance. So we have to see how these requirements fit into Islamic banking, or if they do or they do not, in order to see what is the potential there. Now, having said that, there are, if you look at Africa, a number of innovations have been made, which are interesting and which the Islamic finance providers will need to take on board if they want to succeed. One is delivery methods, yeah? So reaching people who are not banked. And it's very, very interesting that in Africa, if you look at this, whilst the population is not banked, the number of people in sub-Saharan Africa, which is the less developed part than the North African part, the number of people having a mobile phone is close to 70% in 2008. So as 30% are banked, 70% have a mobile phone, which means that a lot of people without bank accounts, without anything, rural, have got mobile phones. So obviously one way to deliver a service would be through your mobile phone. And this is exactly, you can see as this is just giving you slightly more detail on mobile phones as a percentage of population. So in countries like Botswana and so on, you're looking at 100% of the people having mobile phones. Even in very, very rural, very, very desert-like situations in Niger, the first one, you're looking at 10%, 12% having mobile phones in 2008, and probably more now. In a country like Nigeria, where the banked population is quite small, mobile phones have reached maybe 60, 70% by now. It's about 50% here, but it's growing. So in places like Kenya, they have started a delivery mechanism called M-Pesa. Pesa in Swahili means money. M-Pesa means mobile money. So you could pay each other just by text messages on mobile phones. So for example, people working in the city can send money home to their parents by a text message to their mobile phone, which they can then go and buy with that whatever they want in the local shop, in the local market or whatever, and so on. So that money can circulate in the system without having to have bricks and mortar banking or a bank account and so on. So you have to find some way of capitalizing on something like that if you really want to do banking. in that situation. I mean, you have a ready technology which is well adapted and which can be used. And M-Pesa is growing very, very fast. If you have been to Kenya or if you read about it, you will see that it is substantial. The transaction cost also is low compared to any other method which you can use in Kenya. And it's safe and widely used. Okay? So that's one. The second one, that's one part of the innovation I think we need to look at. Look at delivery channels which are not conventional, which don't depend on, eventually I think because of the internet connectivity coming or becoming more affordable, very much like India, online banking, virtual banking will also become quite possible in large parts of Africa. So you have to look at more virtual rather than bricks and mortar banking if you want to do something there. Now, the key requirements, as we said, are agricultural. Those of you who know Islamic finance know that when you look at something like the salam contract, for example, it was designed to prepay the farmer for a crop which was to be delivered later. We have here adapted that to do other things, but the original was related to farming context. Same with Arbun. A lot of the Mudaraba contracts were also profit sharing, risk sharing contracts with farmers and other commodity providers and so on. So really, if we could rework those original contracts, a large part of the need of the African people can be filled by valid and very substantial Islamic contracts which have significant depth in them because they were designed for that situation. In addition to that, there is one thing which is not found in historic contracts and which will be needed now, and that is something we call micro-takaful. Because crop failures, season failures, animal diseases, large scale, these are quite common. And these are activities which would need takaful cover. So just to give you an example, for example, Oxfam has teamed up with Swiss Re to launch an agricultural coverage program where crop failure, etc., will be covered for a small premium contribution to that scheme. And obviously there are lots of details involved in calculating and making it both affordable and also deliverable. But this is the kind of thing which is needed on top of, because all these contracts, once you delve in them, will bear that risk of systemic failure in the whole crop or in the failure of the whole season and so on. So if you don't have that coverage, then the risk profile of your banking operations will also not be sufficiently robust. So we need to look at that. So this is the second part of the innovation circle which I think will be needed. There is a third part, and this is where the deserts come in. There is a project launched in Europe which is called the Desert Tech Project. This project is designed to tap the solar energy in the Sahara Desert for Europe. And it is estimated that if, and they are trying to invest about $500 billion. Investing $500 billion will provide probably in the region of 15 to 20% of European energy needs from the Sahara, transmitted across the Mediterranean. The good thing about solar energy and solar energy panel sites is there's not like an oil well. An oil well, if one person takes it, it's not available to the other. For solar energy, you can create a site parallel to that site and point it south, and that will go to Africa. it's not exhaustible in that sense, right? So if you find ways to tap into that project, the whole of West Africa will not need any other energy source. Will be sustainable and renewable. Obviously, these are long-term projects delivering over large periods of time. So here you have the possibility of funding them by long-term sukuk generation, which can be linked to what I call social entitlements like pensions and healthcare and other things deliverable over a period of time. So if you invest those funds into there, you can. And that's where Islamic finance can play a big role in sustainable energy generation in Africa. And so even the deserts, Kalahari, if you see in the south, can make use, the whole of South Africa, which is probably the richest part, can be supplied through that channel. And that needs thinking from Islamic finance. On the one hand, you have micro level, micro takaful, microfinance, agricultural finance, and so on. And then you have these higher level funding requirements and operation requirements, which will give you long-term cash flows for your product structures. So the opportunities are there. You have a good market size. You have needs for agricultural finance which are suited to a number of Islamic finance contracts, and you have a need for microfinance and micro takaful, which Islamic finance needs to do anyway. By the way, there are good operations on takaful in Sudan in terms of agricultural products. We have not found the Sudanese case interesting here because it really doesn't make sense to us here. But when you look at an African context, somebody offering you protection for your crop is a very, very interesting proposition. And the other thing needed is risk-sharing infrastructure finance, yeah, for those power projects and so on. And that will give you to sustainable finance. But what are the obstacles in terms of competition? Who are there providing some of these things, yeah? One of the big operators in Africa is the World Bank Group. The World Bank Group is divided into three potential provisions in Africa. One is the IDA, which is the International Development Association. IDA is grant funding. And this funding is only available to countries where per capita GDP is under $600 per year, I think. So it's available to the poorest countries, but most of the African countries are IDA eligible. IDA funding you cannot compete with. It's 50-year money, the 10-year grace period, and no interest. Right? So that's something where it's very difficult. The IBRD, which is what we understand by the World Bank, International Bank for Reconstruction and Development, that is something which lends at commercial rates, but still it's cheaper than normal bank funding. So again, one will find difficulty in competing. But these funds are available, IDA and IBRD funds are available only for very specific products or projects which are sort of thought of as enabling the build-up of market and markets, rather than, so like infrastructure, health facilities, education facilities, and so on. So in those areas, if you want to operate, you really have to look at areas which these funds don't cover, otherwise you won't compete. Then there is the International Finance Corporation, which is the private sector funding arm of the World Bank, which will also participate in different projects. Now, IFC is an interesting one for Islamic finance. And IFC has been looking at Islamic financial models. Because if IFC comes in as a base supporter, it has a very good capacity to do due diligence on projects. So a lot of your problems are solved, and you can participate in the syndicate with IFC. And this is happening in some of the projects. You then have multilateral development banks which operate on a similar model to the World Bank, which is the African Development Bank in the case of Africa, and the Islamic Development Bank, which has 12 countries in Africa as member states, and then it also operates in other non-member states. So those institutions also provide funding mostly for development projects. You have historically and increasingly now bilateral development aid and other people who seek resources via aid. So historically you had OECD countries giving a lot of aid for different projects, but recently you have seen the entry of China and India in a big way in Africa in projects. So now every big project, there is competition from China and in some of them from India. Railway projects, road projects, ports projects, airports projects, all kinds of things. And these are also not necessarily at arm's length or commercial contracts. And so for competing with them, you have to watch the space. You have lastly, what I would call predatory food or land seekers. You know, there are lots of countries which are looking at food security, and they are trying to buy large tracts of land in Africa to produce food for themselves, not for Africa itself. And this is creating tensions in Africa, but also spoiling some of the ground for operations, for institutions, and so on. So this is a small summary of the other players whom you have to understand and see what is the space and see what space you are operating in or you want to operate in. But provided you do that, you identify the market properly which you want to operate, then it is possible. However, when you look at present-day Islamic finance, it's mostly delivering to urban middle class, and it's mostly fulfilling urban needs. There is very little agricultural lending. There is little or no microfinance. There is negligible micro-takaful, and there is very negligible use of virtual or innovative technology. So we have to really reverse our focus altogether if Islamic finance wants to succeed in Africa. The question is, can it deliver or not? That is the question I leave for you. Thank you very much.